Kunal as well to get his view on the chart checks. Of course, you can't buy CG Power anymore in the cash market. It's locked in circuit. But what about the other group companies, Kunal? And what's the view, let's say, for tomorrow maybe on CG Power?
So, such kind of moves, they generally have more legs. So, even if it's a surprise move for the stock, at least from the next couple of days perspective, we would probably expect that the stock opens up higher and then, continues to trade in a very similar fashion. But then, of course, then comes the compulsion of the stocks, I think, in terms of lowering of circuit filter, which could probably happen maybe 3 days on a trot once the, circuit sort of extends for the stock. But on the other hand, I think, the other stock which was discussed, I think Carborundum, today also the stock has managed to give a breakout as such for itself. Great volumes, of course, for the stock. But, more interestingly, the breakout of 100 and the 200 as well as the 50-day moving average for Carborundum. I think that's a very interesting name.
Dipan, Mehta, good afternoon. Thank you for joining us. While we spend a lot of time in discussing HDFC Bank, Reliance, Zomato, Paytm, we don't perhaps discuss the Tube Investment, Carborundum, Chola, EID, Parry. I mean, these are the real gems of the South, so to speak.
Yeah, good afternoon, Nikunj. You're absolutely right. These are nice low-profile companies. They just get on with their business and deliver exceptional returns. I think CG Power has been a fantastic multi-bagger stock, and what a fantastic turnaround story it has been. And kudos to Tube Investment for identifying this opportunity and buying into it and turning it around so quickly and creating so much value for its shareholders. So by and large, these are very well-managed companies. They have sound capital management policies, and they generally don't diversify away from their core operations. So, they've been market darlings, although they're not that much in the public in terms of news flow, but nonetheless, they're great performers.
Do you own anything in these stocks? For the longest time, there is one thing which some of these South-based companies have common: great governance, great capital allocation. We don't talk about it, but they've just created so much of wealth that it is mesmerizing.
Yes, absolutely. I think I'll tend to agree with you. Even companies like TVS Motors, Ramco Cement, these are great companies. And if you start adding all the companies out of Bangalore, these software companies, then I think you could certainly say that Southern India is a great source of great value creating companies.
Okay, fair it is. But the other space which is actually making money in the real estate pack is now the NCR focused company. So a lot of these are actually foraying into that region, whether it was Oberoi a few days ago, DLF has been hitting it out of the park. And of course, Max Estates, which is a bit of a, undiscovered kind of name in this entire pack, has also been doing okay for itself. Not Max Healthcare, Max Estates is the stock which is in real estate. So we should pull up that one. What's your view on specifically, let's say, NCR facing real estate names, Dipan?
So I think DLF is a company worth mentioning over here because the largest player in the NCR region, they created Gurgaon right from complete wilderness and created great amount of value as well. But I'm not that optimistic of companies like Oberoi coming into NCR region. By and large, real estate companies are geographically quite concentrated, because they understand the market better, they understand the regulatory mechanism better, they're able to get the permissions and they have the brand over there. So that's an advantage when you're operating in a micro market. And Oberoi's advantage was that it's a Mumbai-based company and it understands the Mumbai market and the Mumbai regulatory environment. Going into NCR is another different game altogether. I don't see so many companies apart from Godrej Properties which have successfully created a pan-India operation worth mentioning. So we'll wait and watch and see how Oberoi's foray into NCR is shaping up. But nonetheless, I think real estate companies are on a song. We are seeing greater volumes being sold, and prices also have been elevated. Every few quarters, they get a decent appreciation in the bookings also, which they are doing. And these companies are focusing more on sales and less on land bank, which means that they're getting maximum return out of their capital. So many positive things going for real estate. In any case, there's a huge shortage of housing, and this entire premiumization trend is very visible in the real estate industry. That also benefits the organized players.
Sure. Nooresh, your take on a couple of these big buzzers on charts: eClerx Services, which is higher by 15%, and New India Assurance, which has been higher for 2 consecutive trading sessions.
So eClerx today has seen a large move and could be a case wherein it could top out for the near term after another, say, a couple of sessions more. The stock has already moved after a breakout from 1800 all the way to 2300, 2400 before today's move itself. So looks like a case wherein we could be topping out in the short term time to take some profits off here.
Dipan, the real estate cycle tends to be a 5 to 7 year cycle because ultimately it's the underlying asset price which demands the price trend. Given that the real estate cycle has started post-COVID, we are about 2-3 years into that cycle. And if this is a 7-8 year cycle, do you think some of these stocks have a long way to go?
Yeah, absolutely. I think the likes of Godrej Properties, Prestige Estates, um, Macro Tech Developers, Oberoi, DLF, they're all, I think, looking at very good returns over the next 3-4 years or so. And this entire shift towards unorganized to organized certainly benefits these companies. And right now, if you study all of these real estate companies, you will feel that they are trading at or slight premium to their net asset value. But at every quarter, they're adding new projects. They're going in for joint development projects as well. And most importantly, the valuation, the value at which they're selling the property, the average realization, that also is trending higher quarter after quarter. And at this point of time, even some of the cost escalation which was there in the input costs, steel, cement, those also have stabilized for real estate companies. So I think next few years would be very positive for all these real estate companies. And I would see that depending upon your familiarization, like for example, being in Mumbai, I prefer to buy Oberoi Realty or Macro Developer because I can see their products around, I can see their buildings, I can see what fresh development is taking place, and in a way, I have a pulse on this market. But that's true for somebody staying in Delhi or somebody staying in Bangalore. They may be comfortable buying with local real estate companies. That's perfectly fine because what we are seeing just now is all across India, we are seeing a nice upswing in the real estate industry.
Dipan, it's exciting to see that how Tata Group of companies have seen massive P expansion. What is next for some of these stocks? Because it's a wave which in a sense has changed for them.
Yeah, I mean, what is next is there's no reason for us to assume that they will not continue on the value creation journey. So I think these are great companies, and Tata Group per se enjoys very high reputation and loyalty amongst the investors, domestic as well as global. And any business you see, as you say, if it's a Tata Group company, it'll always trade at a premium compared to another company in the similar industry. So I think these are things which they have, strengths which they have gained over a long period of time, which will sustain them going ahead as well. And now that we are seeing that the US markets have stabilized and the debt markets over there have also stabilized and inflation seems to be coming under control, all these technology companies, whether it's Tata Technologies, Tata Elxsi, TCS, I think you could expect better prospects from these companies. And I think companies like Trent and Titan really, they've been outliers. Other companies per se have done badly in the same group, but they continue to thrive pretty well.
But would you say the same for Tata Tech as well?
Yeah, absolutely. I think it's a no-brainer. You have to apply for the Tata Tech IPO, and maybe you could even consider buying it on listing. It'll always trade at a premium multiple. And what I like best about the company, the last 3-4 quarters, when a lot of the software companies were under stress, this is one company which continued to deliver very decent numbers as well. And the track record is quite phenomenal. And most importantly, if you look at the entire spectrum of software companies, the companies which are engaged in the automobile vertical, there's least amount of cut in tech spending over there. So Tata Elxsi, KPIT, Cummins, Tata Technologies, I think considering the kind of disruption taking place, they can expect very good order flow going ahead as well.
When you're saying the stock IPO price is around 500 bucks, the grey market premium is suggesting at least 300, 350 rupees. You're saying even if it lists at around 800, 850, one should go ahead and buy?
I would think so, and my advice would be that if you already have an allotment, then you could average at listing price. But I mean, let us see what the listing price does take place, and one could look at a few weeks after that once the euphoria settled down, where the stock price trades at. But I think that even if you do add 300 rupees more to it, then also the price to earnings multiple would be in line with some of the other peer group company, be it Tata Elxsi or KPIT, and these two companies, the listed peer group, are trading at a reasonable premium to rest of the software companies purely on account of superior financials. So I think Tata Technologies also will trade at those rich price to earnings multiples.
Dipan, incrementally in this market, now that there is state election and followed by central election, today we are just considering the impact of that, and soon we will start talking about the impact of election cycle. What should a portfolio manager like you will be doing? Would you be raising cash? Would you be buying puts, or would you do nothing? Dipan, the question was for you.
Sorry, see, I don't have the visuals, so I'm not able to see when you are asking me the question. Sorry about that. See, I normally don't like to buy puts per se or trade in the derivatives market. And we are typically long-term investors. So from that point of view, I think anytime there's an opportunity for a good quality listing or a good quality stock, that's when you should then attempt to get into a company and have a longer term horizon, I would say.
In terms of the other stock movers that we are watching out for right now, it's Vardhaman Textiles, which is up 9%. Inox Wind is higher by 7%. Anand Rathi Wealth is also doing okay, but the key underperformers continue to be from the banking sector and the PSU bank specifically. Dipan, what should one do to their bank holdings at the moment? Should one book their profits/losses, sit on them, or just add positions, average out?
No, I think that banks are going to be a great investment as well. And the only problem with the banking sector is over ownership. Because these stocks are so many in number, a lot of the weightages in the individual portfolios is very high. And therefore, we are seeing this underperformance coming in. Investors are chasing some other investment themes because they already have too many banks in their portfolio. That's my assessment. But by and large, I think these are great secular stories. I do not see any visible signs of the NPA cycle turning bad for the banking industry per se. The credit demand remains pretty strong. We spoke about real estate. That's a sector which takes a lot of credit demand. Automobiles are doing well. Capex cycle has picked up. Working capital cycles have improved. So there's great demand for credit. And broadly, I think interest rate, inflation, all those risk factors have been contained. And in fact, we could expect a long period of stable interest rates followed by a declining interest rate scenario, which is very positive for banks. So in my view, from a fundamental basis, banks certainly should do very well. I understand that they have underperformed. That's more due to technical factors and more due to liquidity reasons than actual fundamentals.
Look at the communication from RBI. Go easy on unsecured loans. It's been a mainstay of growth for them. NIMs, because the interest rate cycle has picked up, the NIM expansion will not be there. There really has to be some new buyer who has to come in for banks to go higher because everybody is drowning in banks now. I mean, it's a struggle to find a bear on HDFC Bank. So when the short-term factors are not on your favor, when RBI is raising the hand about a risk in the unsecured loan, which is a high spread business for them, don't you think best of the earnings is behind us?
No, I don't think so. You're right. I agree that there's ownership factor. Everybody's got them in their portfolios, and there are hardly any bears in the banking sector. But these things take time; they play out themselves. I mean, who knows if you have a very strong FI number coming through the next 2 to 3 quarters or so, and that's easily possible because with interest rates settling down abroad, you could have a risk-on trade, and if the currency starts to strengthen, you could see foreign inflows, and the first sector that foreign money will come into will be the banks, especially large cap private sector banks. So just because a stock is overowned, just because its P multiple is gradually compressing, or because foreigners are not buying, these are not reasons to sell a good quality company. I mean, companies like HDFC, Kotak Mahindra Bank, ICICI, they are still growing in terms of their earnings. And even if the stock prices go nowhere for maybe even 1 more year or 2 more years, you will find that they are trading at very attractive price to earnings, price to book multiples. And I know one thing watching the market, that if a stock is really cheap and attractive, somebody will come and buy it. Doesn't matter what the technical factors are, doesn't matter what the liquidity conditions are. So I'm very positive on banks per se. And if an investor has an under allocation to banks in their portfolio, this is a great time to add banking stocks to your this stock holdings as well. And most importantly, I cannot mention the importance of this credit growth which is taking place. And in India also, when you look at the banks and NBFCs, the net interest margin still remains quite healthy. Of course, there's going to be some pressure, but it's not going to
state that such concentrated linkages may create contagion risk.
Okay, let's get closing comments now from Kunal and from Nooresh. And Kunal, we are about to close almost at the highest point of the day, right?
Yeah, Nikunj, on the Nifty.
Yeah, what does that mean?
So I think more than that, Nikunj, it's the recovery from an intraday perspective. So there are 2 points over here. One, of course, is the recovery for the Nifty from the intraday lows, and again the fact that we are closing above 19,800 mark, which I believe is something which was pending out for the index. So this is a confirmation of sorts. And for the bank Nifty also, I think even though it's been the weaker index over the last 3 or 4 days, I was actually looking at the intraday charts, and a major gap has been closed for the bank Nifty. Now, in this last 2,000 point plus move for the banking index, there have been 3 occasions when the Bank Nifty has done this, and all of those 3 occasions when the gaps have been partially filled, the Bank Nifty eventually goes on to make a new swing high for itself. So, keeping the lower end of the gap, which is 43,000, I think if that level is not broken on the downside, we could be looking at a possibility of a very big recovery for Bank Nifty over the next couple of days.
Fingers crossed for that very big recovery on the bank Nifty. But let's talk about some of the stocks which are likely to open towards the end of the trade, towards the lowest point of the trading session, and that's KEI Industries and RR cables. And this is something, Nikunj, we were discussing in the morning as well. While the structural story is good in these companies, and KEI, of course, we were talking about how has become from an 8 rupee stock to nearly 3,000 rupee stock. But it's unfair to expect those kind of returns yet again.
No, I mean, 8 rupee becoming 3,000 and 3,000 becoming 3 lakh is not going to happen.
Not possible.
I mean, mathematically, it's not going to happen. But these are businesses which should not trade at consumer valuations. Because what typically happens with any power cycle, best of the cycle, worst of the cycle, that you can take a 2-3 year view. After 2-3 year view, the capacity changes, government policy changes, cyclicality kicks in, the sector per se goes through some disruption. That's what I've seen. So what is looking like a secular P multiple which the sector has started commanding should ideally be much lower because of the cyclicality what we've seen. It's not for the first time that we're talking about power shortage, or we're talking about power transition, or we're talking about coal becoming solar or solar becoming wind. Those factors are always at play. But the sheer excitement in this space is just so unparalleled that it just amazes me. Another example I was looking at in the morning was, we looked at KEI, look at APAR, and 10-year change in APAR Industries, and you go to say OMG again. I mean, KEI industry, 10 rupees becoming 3,000. APAR today may be down 5%. But let's again look at the 10-year multiplier here. In APAR, again the same business, transformer oil. There you go. I mean, 85 rupees has become 5,000. Kunal, these are the stocks which have made money.
Absolutely.
100 rupee has become 5,500. And it is not once upon a time. Like 10 years is like just a decade ago. But a decade ago, it has gone from 100 rupees to 5,500, 55x. KEI industry has gone from 10 rupees to 3,000. That is the kind of move some of these sectors have seen. And now to make a case that, okay, they will continue to ramp higher looks difficult to me. Nooresh, speechless, right? I mean, 10 rupee, 100 rupee has become 5,500, 10 rupees has become 33,000.
Absolutely. So, and having traded and invested in some of them in the previous cycles, it tells you that long-term investment over multiple cycles is something which can create a lot of wealth. So, I remember being invested in KEI Industries at 2-digit levels and then making good returns in 2014 to 17. But over the last 3 years, it has been a major surprise. And say nowadays, what happens is today, one thing which we are seeing in the sector is people have started calling them fast moving industrial goods. So to justify the evaluations, that indicates we might be at the maturity of the sector.
Whether we are at maturity or not, but thank you, Dipan, Nooresh, as well as Kunal for joining us and taking us through the trading session today.